G'day guys, welcome back to Mango Invest. In this video, we're just going to break down some more dividend companies in the portfolio. So far we've covered AT&T, Pfizer, AG&C, SPHD, JEPI and a couple others. In this one, we're going to show you Coca Cola and McDonalds within the portfolio, and also a couple of minor changes that I'm thinking to take within the portfolio there. But in the day, you see we're down $767, so still looking at a total equity of $272,000. And we've had some recent dividends within the last couple of days, bumping the cash position up to $963. But I'm just going to talk about Coca Cola first within the portfolio. So just a quick little background of my current position. So stock price is currently sitting at $62.69. That's the 3-year period there that you can see on how it's been tracking. But if you look down here, so yeah, the current price is $62, but I bought in like a while ago when it was sitting at $51.66. Current shares I've got is 203, and a total equity of $12,768. And I'm currently up just over $2,000. The current dividend yield sitting at 2.93%. So we'll just have a look at Seeking Alpha and my analysis on why I chose to put money in Coca Cola. But I always start with the dividend growth and the dividend history, and determining which companies that I find to be like a safe investment. Because you don't just want to be looking for a high dividend yield stock just for the sake of getting more money. It's not really safe that way. But yeah, so as you can see here, so the consecutive years of dividend payments is 60 years straight that Coca Cola has been paying. But it's not only just paying dividends every single year, but they're growing that dividend every single year. So the consecutive years of dividend growth is 60 years as well. So if you were to look over here in July of 2018, they were paying 39 cents per share. Right, you fast forward to 2023 and it's now 46 cents per share. But if you click over to this dividend growth tab just to the left here, you can break it down even further. So here, under the annual payout growth year on year, it actually tells you how much they're growing that dividend every single year. So, and this is pretty important. If you look back down to 2008 to 2009, during the time of the US financial crisis, there was still increasing their dividend every year by 11%, and then subsequently 7% and then 7%, all the way up until now. So they're continuously growing that dividend, which gives you a lot of confidence in the company paying its dividend itself. So you've got fears of recession in the market. You heard about the banking crisis in the US with Silicon Valley Bank and all that sort of stuff. Just looking at the dividend history of Coca Cola and other companies like this, paying a dividend of 60 years straight, but also growing that dividend every year for the 60 years, just gives you confidence in the company. So if you look at trackyourdividends.com, into the Coca Cola position here, you look at all the way to the right hand side, they're paying me $373 every single year. It's a quarterly paying dividend company, so when you break it down, every single month, it's just under $100, so like $90 odd that they're paying me every single month. So it's not too bad there. But let's move on to McDonald's, because that's another quarterly paying dividend company in the portfolio that I want to talk about today. So currently sitting at $283 per share, but I bought in at $205. So that's my average price at the moment, with only 41 shares. So it's not really a big position in the portfolio. Total equity is sitting just under $12,000, and I'm just over $3,000 of profit so far. It's got a current dividend yield of only 2.15%. It is fairly low, but just remember, you don't always want to seek out the high dividend yields, because there may be some certain fundamentals within the company that doesn't really see itself all that secure just because of a dividend yield. But we'll move over to Seeking Alpha and check out the dividend history. And here as well, it's pretty good. So they've been paying a consistent dividend of 21 years, but they've also been growing that dividend every year for that 21 years. So again, not quite as consistent as Coca Cola being the 60 years, but 21 years, again, that still gives me a fair amount of confidence that in 10 more years, say let's just say 2030 or 2040, they're more than likely going to be paying that dividend. So we'll head over to the dividend growth tab here and scroll a little bit down at the bottom. And you can notice even during the financial crisis of 2008, they were still increasing that dividend. And then every year it's pretty much like a minimum growth of just under 5%. So that's even a little bit better than Coca Cola. As you saw, Coca Cola got a low of 2% increase every single year, whereas these guys are no lower than 4%, which is awesome. So this is really important when you're trying to analyze a dividend company, because if you retire and you're relying on dividends as your main source of income, it's fairly important to understand how much money you're going to actually make. Because let's just say, for example, I was talking about on a previous video, BHP cut their dividend basically in half. So we're sitting at around like a 13% dividend yield, and then I was expecting to get over $1,200 for a dividend payment last month, and then all I hear in the news is that they've cut their dividend in half because they didn't make as much profit for that term or that quarter. And then next minute, instead of getting that $1,200, I'm only getting $500 now. So that was very annoying, and I was only just sort of thinking, if there's people out there who are just relying on this dividend income, their income's just being cut in half. What do you do about that? So it can be quite frustrating. So that's why now I'm sort of more focusing on companies that are consistently growing their dividend, but paying their dividend for plus of 20 years. So now I think what I'll do now is just focus my attention to Coca Cola, McDonald's, and a couple of other companies that have been a little bit more consistent. So let's move over to track your dividends and scroll down to McDonald's. And just here, if you were to look all the way to the right hand side, every single year they're paying me $252. All right, so it's a little bit less than Coke, but given that they are so consistent, with the cash position, I'm going to look to put more money into those companies there. Now, just a quick little change I'm thinking of doing. It's probably more so going to happen with SPHD. So I've currently got a fairly large position in those. I'll just quickly show you. So 203 shares at a total equity of just over $8,000. SPHD, obviously you can see there, it's Invesco S&P 500 high dividend, low volatility ETF. They've been paying a dividend of 10 years, but they've only been growing it for 1 year consistent. So if you look over at the dividend growth, right, in 2021, they've actually reduced their dividend by minus 14%. All right. So now what I'm looking to do, if you were to look over to SCHD, which is a Charles Schwab dividend equity ETF, quickly here you can see that they've been paying a dividend for 10 years, but instead of increasing it by 1 year, they've increased it every single year for 10 years straight. All right, so if you click over to the dividend growth tab, all right, under annual payout growth year on year, you can actually see that they're growing their dividend at a minimum of 6%, which is extremely high. All right, so what I'm thinking of doing is taking all the money out of SPHD and then putting that into SCHD. The changes are, instead of paying monthly, they're going to pay quarterly. But again, at least I'm getting that, that compound annual growth rate is a little bit more than SPHD. So in turn, that's going to be a little bit more money. So let us know what you think about that in the comments below. I'll be interested to know your thoughts on what I should do with that. But thanks for watching the video. If you want to use my referral code when signing up for Stake to get a free stock, it's ChrisM965. I'll leave that in the description below. And thanks for watching. I'll catch you next time.